Welcome back to Bunnex Investment Group. In this video, we are going to talk about a high-performance gold trading strategy, specifically for those who want to be high-performance traders with discipline, patience, as well as self-control. From break testing, I obtained a 70 to 75% accuracy of this strategy in 100 trials, meaning that out of 100 trials, I had around 75 winning trades at 2-to-1 reward to risk ratio. This is a high performance strategy that asks for your discipline as well as your patience. A lot of people cannot do this consistently, but they actually know it will definitely pay them. But when the hypothesis falls into the 25 losing trades, that is where the problem emanates. We are saying within 100, you're going to have 75, which is 3/4 of the whole bar like this. And we do not know how these 25 trades is going to be distributed within the sequence of taking your trades. So a lot of people will actually blow their accounts when it comes to this small fraction of the bar. So basically, all that you need is to be disciplined. No matter the losses, no matter the wins, you have to keep on doing the same things over and over again. So basically, this is the template that I'll actually explain shortly. You need to picture this and understand. You can see this is a red bar, and this is a green bar, and another red bar. But this green bar is actually within the range of this red bar. That is basically the template that you may need to print out or to take a picture so that you will actually be able to replicate it over and over again. All right, so basically we call this an inside bar. And this arrangement shows a phase of consolidation, which is being done by market makers. We can see that there is this big candle, and the next green candle is actually within the range or within the previous daily range, meaning this is a range. This is the daily candle that is providing a range. So market makers will accumulate contracts before the big move. So basically, we'll actually see an inside candle, which signifies that market makers are in a phase of accumulating people's money. So your job is to look for an inside bar that is within the previous daily range as your first step. So basically, this is the first step that you should see, an inside bar within the previous daily range like this. All right, so basically, here's this little and simplified explanation of the trading strategy. What we want to do is find an inside bar falling within the previous daily range. Like in this particular case, we can see this is a daily range, and this one is actually falling within the range. Mark the open and close of the previous day. So in this particular case, we are now marking the open and close of the previous day. If the candle providing the daily range, which is this one, the daily range is a red candle or a bearish candle, we will expect a sell on the small time frame. So in this particular case, the daily range provider is a red candle, meaning that we are expecting a sell, and on this inside bar we want to expect a sell at this particular price point. That is where we would look for candlestick reversal pattern or any patterns of the small time frame that we may actually get. So let's have examples to fully understand how this operates. Before we go over the examples, let me quickly show you something powerful. Our profitable trading algorithm called Stophunter Pro. This trading robot took a small $1,000 account and grew it into over 500,000 in just 5 years. It's designed to catch the exact stop hunters market makers use. Here's what you could have got on a $100 account. We are going to use the previous quarter, which is May 2025, right up to the time of recording this video, which is 18 August 2025. So I'm going to start off this test right in front of you so that you'd see we are risking 5% of the $100, and this is what we were going to get. $100 initial deposit, and then we were going to get 291 is our profit. Here is the profit by month ratio. If you need this particular trading robot and you're serious about leveling up your trading, fully automated and no stress, no emotions, use the link that I've left in the description box below to get your 249 lifetime copy. All right, so basically I've just gone through the gold chart so that we can see what I am illustrating. So in this particular case on gold chart, we can see that the market was actually going to the upside. We obtained this candle, green candle, and then there was this inside bar. It was a bar inside this green candle, and we've said all that we'll do is to mark this low, like in this particular case, on this particular closing price of this candle. That is where we want to look for buys, since this is a green candle and buys were really explosive going to the upside like that. Your stop loss should be below structure, which is basically below this candlestick, right? So going next, we can see the high and low. This is providing a range, and then this fell within the range. And after that, we've said, since this is a red candle, we are expecting some shorts or some sells at this closing price of this particular candle, and that is what happened. Our stop loss above structure, our take profit at 2 to 1 or even 3 to 1 can be accommodated. So this is where we're going to short the market, and we can see it going to the downside like that. So there was an additional trade, because this one was actually an inside bar. The red one was an inside bar of the green one. So since you were already in a trade, you could add another entry at the closing price here, so that it will all go to the downside like that. Then here we can see as well, there was high and low, and a candle falling within that particular range. And after that, we said if this is red and then we get an inside bar, we expect a sell, right? Like in this particular case. So a sell was actually issued, and the market went to the downside more than 3 to 1, because this was actually a small stop loss against what was moved. So in this particular instance, if you understand how to use levels, or if you understand how to trade within the top 1% trading rules, you'd actually find yourself understanding that there was a completed cycle in this particular case with these green candles. And if there was a completed cycle, you would know that it's no longer viable to keep on taking trades in that one particular direction. Why? Because you can see here we had the high and low, and this candle was an inside candle, and we were still expecting to go short, which is no longer viable. Why? Because a cycle had completed and the market was actually starting to go to the upside like that.